Good morning, good afternoon, and good evening, Alpha Traders. This is your Friday version of Crypto and Clown World. Saturday trading day for cryptocurrency just opened up. Friday just closed, actually, but it is still Friday for me until midnight. So, what did Bitcoin do today? Well, go to the stream yesterday and listen to what I said what Bitcoin was going to do. Did it do exactly what I said it was going to do? Yes. Why? Do I have a magical 8 ball? Am I some magical internet freaking crypto trader? No. Am I blowing smoke up your ass? No. I know how to read volatility, probability, and statistic indicators, specifically the alpha trading system. I said, as soon as this day opened up and I saw this tight daily range, I said, Bitcoin's going to trend today. I thought it would trend a little more, but it definitely trended. Where did it trend? First, we had a couple little 15-minute trends to the downside, but the majority of the trend was to the top side. And I said Bitcoin's data set was going to make its way down to the bottom of the monthly range, the 68.3 Laplace distribution range to the downside on that daily candle, the daily S2, the green line, and the top of the weekly. I said this area right here, the bulls are going to defend this. I said when the bears come down here, they're going to get a bum full of bullhorn. They tried to run it right here, didn't quite make it, ran up. It was having trouble, rejecting on this tight daily range. Look at that wick, went right to the area. And the rest of the day ran up. And I said, as soon as Bitcoin closes a 4-hour candle above the middle of this monthly range, it's going to make its way up to the top of the monthly. It's exactly what the data set did. This was a great close right here. The daily candle closed above the center of the monthly range, right? The daily candle closed above. It was the first time this week. Did it this day? No, it closed below it. Closed below it. Today, closed above it. Friday, going into the weekend. Now, right now, I've already looked at the 15-minute volatility charts. And I kind of said, I think right now is what's going to happen. Bitcoin's going to run up, test this month, top of the monthly again. 42,175, 42,2, maybe even get a full, which, yeah, a little bit over 42,2. Might even do a 4-hour 1SD up here at 42,400 area. And then it's going to come back down and test this daily range. All right, here's the new daily range. And what do I like about this new daily range? It's the first daily range this week that's above the center of the monthly, right? And it was last week too, right? For the last 2 weeks, Bitcoin's data set has not been able to get a daily price action volatility range back up above this monthly level. Now we have, right? This daily is fully above here. The weekends in the past at least couple months have been pretty bland, right? Not a lot of action, not a lot of volatility going on. I even said before the stream started to a couple members, it's a high probability that Bitcoin all weekend is going to range in between the top of the monthly and the center of the monthly, back and forth all weekend. Now, they could understand, they might understand that people know that the weekends have been boring. Perfect time to run Bitcoin to where by the end of the weekend, possibly make a 44K run, 44.5. This red dotted line, that is the top of the extended weekly price action volatility range. What do I mean when I say that? This is the last resistance level of the weekly price action volatility range. So yeah, here is the top first. Actually, that's only the second. Sorry, guys. There's the third up there at 46.7. I don't think by the end of the weekend though it's going to get by here, especially today. Why? Well, here's a 95.4 Laplace distribution range, right above this R2 on the weekly. There's a 95.4% chance on this trading day we just opened up that Bitcoin will stay below there. So the probabilities are it probably does not get above there, at least today. Not saying it can't. I'm not saying Bitcoin can't run up, right? We all know the volatility from the stream yesterday. Volatility was low on the 4-hour. It expanded to about a 70%. It's pulled back a little bit, but the 12 hours still low. The weekly still low. There's a lot of time frames with the volatility on the higher time frames that's still low. So this thing could surprise everybody this weekend and make a move to the top side. But, that being said, that's just to appease some people who love to talk about, oh, these big macro moves. We could care less at Alpha Trading. We trade low time frame volatility. So it really doesn't matter. The more volatile, the happier we are, right? We don't care if that volatility's to the top side, to the downside. We just want volatility. When I'll say that, here we go, we're playing the drinking game. Every time I say YouTube Jimmy, or I'll tell you what, or I say price action volatility range, you got to take a shot of whiskey. Get ready. So, as YouTube Jimmy's out there telling you to swing trade Bitcoin, at Alpha Trading, we're calling YouTube Jimmy a fraud, right? Because you do not swing trade volatility, period. I don't care if it's all bullish volatility or all bearish volatility. You don't swing trade it. Why? Because Bitcoin is going to do some counter moves to knock people out of your positions. You got to trade low time frame volatility. You got to take your profits at distribution levels on the intraday charts. All right, these white cross lines, these blue cross lines, these are the daily distribution levels for normal and Laplace distribution. All the other lines, the skinny blue, skinny white, those are 4-hour distribution levels. Normal distribution, Laplace distribution. Everything else is daily, weekly, monthly price action volatility ranges. Drink number 2. And I'll tell you what, there's drink number 3. That if Bitcoin closes a couple 4-hour candles, I'm going to say a couple above this monthly range, we could have a big weekend. But I just have a feeling, compared to what's happened the last couple months on the weekends, that you're going to get a rejection in this area, right? All day today on this Saturday trading day for Bitcoin, you're probably going to range in the 68.3 range. That just so happens to be pretty much center of the monthly, top of the monthly. That'd be a great little range, drive everybody crazy. Maybe we have one big pump, like I said. Look to see if it can close a couple 4-hour candles above here. Maybe the first 12-hour candle closes up above this area. Let's even be safe, 42,250. Let's see if we can get a 12-hour candle close above the top side of the 68.3. Then possibly on Saturday, maybe we do a 1SD move, 43.6. Maybe it pushes all the way to that R2 on the weekly and the 95.4 today. All right, we're talking a couple $1,000s in price action, a little more than that. So we'll have to see what happens. All right, let's go right here real quick. And I talked about this at the beginning of the week. I saw where these levels were at. BTC every day of this week, Monday, Tuesday, Wednesday, Thursday, and Friday, closed above the first standard deviation normal distribution on the weekly candle. That's at $40,800. We're literally $1,100 above it right now. So that's another reason. And look where the 2SD is, normal distribution. It's at 44.4. 44.4. 44,691 is where that R2 is on the weekly. So it would not shock me if we do make a move up there, considering we closed all 5 days of the regular trading week for traditional markets. They weren't able to push that back down below the 1SD. It wouldn't shock me at all to make a run up here. But that second standard deviation is right at the mean of the projection from the 41K low. It's right on top of it. And so it would, I want to say, it would be great if Bitcoin could close above that 2SD going into the next week. But there's a 95.4% chance that it stays below that 2SD, and that 2SD is on the mean of the projection. So another very low probability Bitcoin closes above the 2SD in the mean of the projection. The probabilities are against that happening. I'm not saying it can't. There's a 4.6% chance that it can. But if you're trading probabilities, what are you going to go with? You're going to go with the 95.4 or the 4.6? It's a no freaking brainer. And I'm telling you right now, if this thing starts pumping, that was your, fourth drink? If this thing runs up to the 2SD, for God's sakes, take your profit. I'd take my profit at 44, to be honest. I wouldn't even let it get close to that 2SD, because it could reject hard. You could lose a lot of profit. So keep that in mind too. That's what I would do as a low time frame volatility trader. I would be taking my profit all the way up. And there's probably a couple levels. I doubt I would sit in a trade that long, right? I doubt it for sure. I mean, I would be looking at some probably some daily resistance levels for the volatility range, right? Got one right here at about 42.7. If this thing were to start pumping, say I'm already in this trade, chances are if I'm trading if I'm getting an entry on a 5 minute, I'm going to take my profit at the top of this monthly range, right underneath the 68.3 Laplace. Then reevaluate, get ready for another move, get my next entry on the 5 or 15 minute. And if it's going to continue to go to the top side, it never happens in one big push, right? You're going to get some erratic behavior on those low time frames. Maybe it pumps up a bit. You're already out of the trade. It rejects off this 1ST, comes back down, test the top side of the 68.3. And then the charts are like, okay, it's going to be a good trade. You get back in, run it up, take profit at the 1SD on the daily. So, or the daily resistance levels, or the 2SD on the 4 hour. But that's of right now, right? These 4 hour candles are going to push those levels up. The 3SD on the 4 hour right now, that's a 99.7% level, is at 43.4. So if we were to have an explosion right now going into the day, I highly look at the probabilities are against it doing a 1SD move on the daily, because the 3SD on the 4 hours right there. Good stuff. Let me see here. Check something real quick. All right. See if anything else sticks out on this bad boy. What? Let me do something real quick here. A measuring tool. 18 bars. 18. Just moving this projection back a little bit, right? To the all-time high dump. Want to see where we're at in that projection, right? Because when you use these tools, you use them. You start the projections on pivots of price on the first bullish or bearish candle, right? It's actually pretty good. I mean, I was talking about it right here when it was just hovering right inside the 95.4, tried to dip down below. And this is when I was telling everybody, look at the 99.7 Laplace distribution range. It was down around 20K. The bulls literally this week right here ran down, did a 1SD move. This week right here almost did a 3SD move before it, right? Then it starts going up. Now Bitcoin's data set is getting very comfortable inside the 95.4. When that happens, I'm telling you, this thing could be back up over 60K. Don't be shocked if this thing makes a run back up to the bottom side of the 68.3. Okay, right there. Now let's see where that 62K is. Let me reload this chart. That's what I really wanted to see. I want to see where the 62K level is on the projection down here. Well, what do you know? What do you know? It's right where everything's coming together here in the next couple weeks, right? And this is the projection from the 60 to 29K dump, right? This white dotted line is the mean of that projection. Then the top side of the 68.3 right here from the projection on the 41K low, they're all coming, they are going to be right on top of each other in the next couple weeks. Don't be surprised by the end of this quarter if Bitcoin's back up around 60K. I'm not saying it's going to happen. This isn't a signal. I'm telling you what these volatility, probability, and statistics charts are telling me. There is a probability of that happening, especially like I said, there's a 95.4% chance Bitcoin's data set does not close above the mean of this projection. But if next week closes above it, right, or we even get close and Bitcoin starts making a run, it could be by the end of this quarter, right? We've got about 10 days left, almost 2 weeks, to make a run up there by the end of the quarter. 100%, man. It can happen. pull up the quarterly on Bitcoin. Let's take a peek at this bad boy real quick. Kind of like when I was talking about SPY. Just think what this is going to look like by the end of the quarter. Even if Bitcoin can get to like above 55, it's going to be now. When you trade the alpha trading system, we understand there's no like magical internet freaking little elves that are making these candles. Volatility creates the candle pattern. Okay. That is, if Bitcoin can get up around 55 by the end of this quarter, that is going to be a massive, massive, very volatile bullish hammer candle that could send this thing up to 100K. Won't shock me at all, especially in the conditions the economy and everything's in the world. It's all good for Bitcoin. Let's get this straight. This isn't a regular asset, right? Where's everybody going to run to? Where's your money safe? Wake up. Wake up. In my opinion, it is the only sound money that there is in the world, right? It's Bitcoin. Let's see here. Oh, I know what I wanted to show. So on the 4 hour, I was talking about this yesterday. Let me pop on the 4 hour. That there was some hidden bull divergence, right? Right here. Low, lower low. Low, higher low. Okay. Then Bitcoin just went pretty much sideways. Pretty much just went sideways. No bear div, nothing of that sort. But is what happened right here when this 4 hour candle low there, 4 hour candle lower low there. Look at the returns oscillator. Low, higher low. Bam. 2 4 hour candle that shot us right back up to like 42. That's the divergence between price action and returns. Would not be a bit surprised if that's not even visible on traditional technical analysis indicators, that people like to think that that's the way to track divergence. It's not, right? Professional traders don't use divergence between price action and RSI, or price action and stochastics, price action and MACD. Bullshit. You want to use divergence between the returns and price action. Why? Because that's the returns. Price action follows the returns. Are we understanding this? And so when you have divergence between returns and price action, it's telling you, hey, the returns right now are telling you the return on your investment is diminishing. Take your profit. And that's on low time frame trading too, right? That's it. When you're trading low time frame volatility, there is so much that goes into it. These are my 3 main trading charts. I'll have, wait a minute. I'll have a projection. Let me reload this. I'll have a 5-minute data setup or a 15-minute data setup. I'll have a projection running, right? I'll have the VRE where I know where all the daily and 4 hour levels are. I know where all the daily, weekly, and monthly price action volatility ranges are. And then this is my volatility chart. And when I'm in an active trade, it's not like I'm bouncing in between. 3 of my 4 monitors this chart will be on a monitor. This chart will be on a monitor. And this chart will be on a monitor. And I only got one eye, so go figure that out real fast. It's hard work. And I'm bouncing I am looking at all those charts. I'm getting good entries. I'm getting good exits. 90% of those trades are all limit orders. The only time I will ever market out of a trade, it's usually profit taking. And the data set, for whatever reason, maybe I didn't front run an area far enough. Maybe I got a little too greedy. Then boom, I'm not going to chase it long. If that thing starts going back down, I'm going to market out of the position, take my profit. But very rarely will I market out of a position. It's just never a good idea to be the taker on a trade. You're literally liquidity for the bots, right? For those algorithms that are trading that low time frame volatility. Limit. Do you think they're marketing? Do you think the algorithms are market trading? No. They're the market damn makers. We need to get this figured out for sure. All right, let's see here. Excuse me. So you can see too on the variance had an outlier right there, right? Boom, 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 boom. And what's an outlier, Bilbo? Oh, you're using all these strange words. I've been using freaking traditional TA and you're confusing me. This is variance. What is variance? Variance is the spread of the data set around the mean. Okay? Variance never goes below that zero threshold. Variance rises and comes back to that zero threshold. And when you start to have data move away from the mean, whether or not that data is moving below the mean or above the mean, the variance is only going to go up. And when that variance starts to go up and the data is moving away from the mean, you want to know how it's correlated. The outside line is blue right there. That means when this variance started rising and it was positively correlated, that the data set was going to move to the top side, right? Or when you start to get a rise in variance, right? It started out positive. This is why you do not swing trade Bitcoin. I'm looking at the 4-hour chart at the beginning of the day to get a little bit of a bias of where I should be allocating my full account at, right? What's my bias? Scalping long, scalping short, where's it at? And so, but look right here. It goes negatively correlated. Look at the data set. Down. Okay? This is where a lot of people, specifically YouTube Jimmy, Bilbo, who's YouTube Jimmy? Everybody, all the YouTubers out there that are talking about crypto technical analysis, they are a pack of wild YouTube Jimmies. That's a triple drink. It's just crazy, you guys. They don't know what they're talking about. A lot of them don't even trade. You guys, they're pulling the sheet, they're pulling the wool over your eyes, man. Right? They are wolves. And they're not alpha wolves. They're nasty little boogers. They're taking advantage of all the sheep. Be an alpha wolf, right? Be a market maker, man. Don't be a taker. Holy crap. Seems like I ran every day about this stuff. Well, I'm going to continue until I just drill it into everybody's head. What's going on? We are the underground scene. They do not want us talking about this stuff, right? You guys would be surprised. People, we hardly get any views on YouTube. There's a reason. Our shit's being suppressed. You might think not a small channel like us gets suppressed. We are. They do not want our message getting out. Guarantee it. So they're like, oh, I better stop them while they're small. So, yeah, you guys, that's who YouTube Jimmy is, man. They're scoundrels. They use you as liquidity. Okay? Trust me. You're buying their programs, right? You're buying their stupid indicators, their traditional TA indicators. YouTube Jimmy lags just as much as their lagging indicators. It's one big lag show. Our indicators don't lag. Why, Bilbo? Well, you said all their indicators lag. Why don't yours? Because ours are built on the returns. The returns move first. Then the price action follows the return. Follows the returns. Shit, had to get some water. All right. Let's see the 90-minute here. Variance low, right? Variance is low. So I'm looking at the 4-hour and the 90-minute. These are the two charts with the 45 where I'm going to get my bias. That's the workflow. As soon as I get an intraday trading day started in crypto, I'm looking at the 4-hour, the 90-minute, and right now on the 90-minute, what do we got? Do we have a lower low? A lower low building on the returns oscillator. The returns oscillator, not the relative strength index. It's just fucking worthless, man. Worthless. You come use this indicator for a week and you tell me I'm wrong. It's setting up hidden bull divergence. Well, what's hidden bull divergence, Bilbo? You got a lower low on the oscillator. It's building though, right? I didn't say it's set in stone. This returns oscillator is not turned up yet, but boy, It's sure trying. And it's at the second standard deviation band. When you get down there, very rarely, sometimes I'll throw it on a 3SD, right? All right, let's see here. But yeah, this thing, if this turns up, we got hidden bull because we got a low here, lower low here, or a higher low here. All right, low, higher low, low, lower low. That's hidden bull divergence between price action and returns. If this returns oscillator at the end of this 90-minute candle turns up, look at the log return Z score. All right, it's on a mission, heading to the top side, looking good. All right, 45 minutes. Let's see here. Same. I mean, this is some serious hidden bull div, right? I mean, we're talking some steep hidden bull div. What's all this telling me? I mean, between returns and price action, I'm telling you, man. I mean, we could have a good weekend. There's no bear div or hidden bear div, right? Let me see here. No, not really. Not really. I'll tell you what we need to happen. We need this 45-minute to bounce right here. Stay right around the zero mean, head back to the top side, right? The Fishers are definitely heading up. Look at the 45 was trending on that move too. That's the entropy. That is the entropy. Now, especially if this entropy percentile right here starts to expand again, you see the correlation break to start sloping up positive, right? That's going to be a good looking to have a move to the top side. Now the 15-minute. I talked about this right before the stream. Let's see. There's no bear div at all. There was a little bit of hidden bull. And on the 15-minute, we ran 3 15-minute candles right to the top side. No bear div created, though, at all. It's a beautiful thing. The Fishers are heading up as the volatility bands were squeezing. And the log return Z score with an outlier. Now, listen, this is like a returns bullish reset. You literally have a outlier on the log return Z score drop all the way down below the 99% confidence interval. When that happens, you usually are going to make your way right back up to the top side, right? And the price is going to follow the returns. And as that was happening, look at the price. As that was happening, the price was staying steady and even going up. So, pretty bullish, my opinion on this 15-minute. I would be down here. Look at this. This is a no-brainer too. Look at the volatility bands. So now that I've seen all that, and look at the outlier on the variance on the 15-minute, you want to see it even more powerful? There's the outlier on the 5-minute. So right now, seeing that, what I'm seeing on the 15, those volatility bands tightening like that, I'm down here, I'm foaming at the mouth, I'm waiting to see what I want to see. And I can't teach people I can teach people how to read the individual indicators, but it's really, really hard to teach somebody how to use it all together. That comes with time. You just have to work on it. You got to be able to look at this chart where most people are just get lost immediately and they're just like, oh my God, that's paralysis by analysis. And I'm like, yeah, well, maybe when you have a bunch of worthless lagging indicators, it is, but that's not what we have here, right? This is volatility, these two indicators. This is entropy, these two indicators. Every one of these indicators right here is what I use for divergence, right? Divergence confluence. And then here's your variance. It's going to tell you when there's a spread of data leaving the mean, whether it's positively or negatively correlated. And when that line's white, that's just regular variance. When it turns pink, you're having an outlier. And when you're having an outlier, it means a fat tail event. And a fat tail event in statistics is a 2 standard deviation or more move. And I'll show you something real quick. Let's go right here, and then we're going to wrap this up. Wrong chart. Boop. Let me turn off. Actually, I'm going to leave the PB2 on. Boop. This on a 5 minutes. Have to really spread this baby out. That was the move right there I was talking about, correct? It was the variance was showing there was an outlier. There's going to be more than a 2 standard deviation move to the top side. What's that? 64 bars. Get ready. Doing. It almost ran up to a 99.7 Laplace range. If I were to change this, like I will real quick, to normal distribution, it hit a 3SD all day long, guarantee it. It exceeded it. That's why these indicators are so powerful. I mean, I don't know how else I can explain what we do is the right way and what 99.9% of what people are being taught is the wrong way, right? There is a wrong way to trade, and that's why you're not making any money. That's why you're never withdrawing funds off the exchange. And I'm going to leave it at that going into the weekend. Oh boy. So listen, if you want some help, the link to our Discord is in the description of all of our videos. Come into the Alpha Trading Discord. Check out the shop channel. There's 2 different levels of the Discord that get you access to the Alpha Trading system. Right? Open up a support ticket if you have any questions. Don't just come in, look around, because you're not going to see a lot, right? There's a little paywall. The lowest level of the Discord is $10 a month. Come on now. You're paying YouTube Jimmy more than that, and he's robbing you blind. So come into the Discord. If you have any questions, you want to see some examples, just open a support ticket. We'll show you all you need to know. And I want to thank you guys for watching live in the Discord. Another bonus of being a part of the Alpha Trading Discord. You get to watch these live. Don't have to wait till they come out on YouTube. And with all that being said, wherever you're living on this beautiful blue marble, have a wonderful rest of your morning, afternoon, and evening. Especially have a great weekend. We'll see you Monday, 5 p.m. Pacific Standard Time. See you guys.